In 2014, I met someone who completely changed my life. His name is Toby. He's actually in the audience there. And I ran into him totally coincidentally in Bangkok. And I have a completely different background. I studied medicine. And he talked to me about this thing called blockchain and how it's going to change the world and how it's going to transform a lot of different industries. I'd heard about Bitcoin in 2011 from a patient, and I had written it off as a scam because I thought, who is interested in investing some digital money that no one really cares about? But he really opened my eyes, and especially this fact that the World Economic Forum puts out that from back then in 2015, 10 years later, 10% of the global GDP will be stored on blockchain. That really opened my eyes. Now, most people, when they look at that, they only look at cryptocurrencies, but it's actually a lot more than just Bitcoin. It's blockchain 2.0, how I call it. I know that many of you picked up that book that I just recently wrote, where I talk about 100 super innovative applications of this decentralized community that is very relevant. Now, initially in 2014, I was more interested in the medical application of that because I always saw that problem of storing patient data. But I did understand that the financial application is the most relevant because it is the most approachable. And starting with that, I want to talk about the 10 necessary steps from today's perspective. And probably we could find 20 more, but I want to talk about 10 improvements, updates, mind shifts that I think have to happen in people for decentralized applications to really have groundbreaking success. And the very first one doesn't only apply to cryptocurrencies, it applies to any blockchain application. And it is the question not what they do, but what problem they solve. You see, we all always know what applications do or what things do, but that doesn't mean that there's a reason for them to actually exist or they should exist. I mean, you can create something that doesn't solve a problem and it's there and you can hype it, but it will always disappear afterwards. So the most relevant question any entrepreneur always has to ask him or herself is, what problem does an application solve? And is it the best solution for this problem? Because if you have a better solution, the better solution will always prevail. So let me start with the most popular application, cryptocurrency. And what's the problem a real cryptocurrency actually solves, like Bitcoin? Is it speed? If it's speed, then you don't understand decentralized services. A decentralized service is always more inefficient. It's slower, it's more expensive. By definition, it has to be. Just because a centralized service today is slow and costs something, it's because there's no competition. As soon as competition comes up, it adapts, and it's faster, and it's more efficient, and it's cheaper. So don't use the argument for cryptocurrencies that they are faster, cheaper, or give more access. They don't. It's just centralized services don't have to. They make enough profit offering it the way it is. So what problem does a cryptocurrency solve today? We could discuss and we could argue and we could say that it could become a global world currency. I don't believe that. I buy more into the idea that is an insurance policy against the entire centralized world. If I give you the challenge and say, create something that no one can take away from you, that cannot be stopped, that gives you some kind of value, and you could move anywhere you want it, and you can always take this value with you. It cannot be gold. It's impossible. Gold can be taken away. We have seen it in history over and over again. The way Bitcoin is structured, it would fulfill all these criteria. And so that's why, to me, digital gold is a very, very fitting explanation of the solution or the problem that a cryptocurrency solves. And this is, in my opinion, the very first step. We need to ask ourselves, what are the problems that these things are solving? And we're going to pick up a couple of other examples where this is not quite clear. The second thing is obviously usability. It's usability of the actual applications. In cryptocurrencies, and we're using the term currency, not crypto asset, obviously it is about using these things as a currency. The company that Toby and we started with 10x is about making cryptocurrencies spendable anytime and anywhere. And we've had our ups and we've had our downs. We've had companies fighting that. We've had large institutions not being as fast and cooperative as we see this. But the thing is, if you cannot use these things, if you cannot actually use them in real life, the life we live in, not on a blockchain, not in a virtual world, there's no physical relevancy to it. I can highly encourage you to try this out. Download our 10x app, sign up, and test it, and see how everything works, and what the flow is, and what the ideas are. And this is just the beginning on how to use these cryptocurrencies. There will be a lot more to come. One of the reasons why I highly endorse companies who really work on solutions, not on the futuristic solutions in 10 years, in 5 years, but on solutions that affect this right now, is because this is what's needed for cryptocurrencies to really go into the masses. The next point that has to change is a mind shift in money laundering. Money laundering is basically a function of anonymity over transparency. And all the banks, all the financial institutions in the world approach this by changing one part of this formula, and that is by driving anonymity down. And they do this through KYC. So the way they do this is the most inefficient way possible. Every institution in the world, in order to be part of this large money pool, needs to know who their business, who their customer is that they deal with. And that's how they approach money laundering. It's as inefficient as it can possibly be, because every institution is doing the same work. And if you have ever signed up for a new bank, for a new financial service, it's worse than going to a doctor doing the same checkup over and over again. You go for an x-ray here, you go for an x-ray there. You always go for the same problems, for the same things. These companies have to do it because traditional fiat money does not allow for the second part of the function, which is transparency. In a blockchain, at least in a transparent blockchain, we're not talking about Monero or Zcash, for example, but let's talk about Bitcoin. I have a ledger, and I can check this ledger from its origin until today. So I don't necessarily need to know everyone's identity. I can see the money flows that go through the entire system. And we're talking about money here, but we could talk about any other kind of value, anything that's stored on a blockchain. The thing is, I'm part of work groups for the European Union. And you cannot believe how often I have these discussions there in the European Union on this fact, where still in their mind of people, the cryptocurrencies are so wonderful for money laundering because you don't know who they are. The anonymity factor is unknown. When actually it's shown that cryptocurrencies are actually like the absolute worst idea for tax evasion, for money laundering. It's just because today people don't look at the second part of the formula, but they will. And then it will just eradicate potential money laundering, tax evasion, and so on. So it has to be a mind shift, which part of this formula I'm kind of approaching. And you will see there's more and more companies that are quite smart who come out and they offer analysis tools for blockchain. And that's definitely the future to work on this. Actually, one of the bigger problems that I see is the next factor, and that is market manipulation. And it was just 3 weeks ago that someone sent around $20 million to an exchange in Hong Kong. And they used this for a bet, to bet on the Bitcoin price dropping. Shortly afterwards, another $180 million moved onto another exchange in Hong Kong. And it can just be speculated, but we assume it was close to a market sell order where $180 million pretty much entirely wiped out an order book. Not entirely, but really drove the Bitcoin market price down because they sold $180 million. Now, there's nothing wrong with these two things. They are independent action, and from its origin, you don't see that they come from the same person. But how likely is it when the average transaction volume of these bets for the markets to drop are normally in the thousands, and suddenly they're in the millions? And coincidentally, they just happen a few days prior to when $180 million enter the market and drive down the price. Now, I have to admit, I see myself more as a pirate, and so I'm not pro-regulation at all. But this scares people because it scares the inherent system can be played around, can be pushed around. And it keeps players from entering the market because they're going to be like, there's nothing I can do about this. There's people who enter and they just play ping pong with the coins. In traditional markets, this doesn't happen because in this case, there would be an investigation. Who is this? Why did this happen? Did they have any information? And I highly think they did. And that's why they made this $20 million bet for the market crashing, and they cashed in big time. But in this case, nothing happens because Bitcoin is not regulated in that case. And I think it shouldn't. But I think there should be some insider trading policies, because this is, in my opinion, highly criminal. And it's not so much about the ethical perspective here for me. It's highly criminal because it keeps this industry or this ecosystem from growing, because it keeps other players out because they're scared to enter the market. In our own company, 10x, we have our own cryptocurrency. It's called 10x Pay, and you can check it out on coinmarketcap.com. We have an internal or an insider trading policy where if we know that important events are coming up, employees are barred from trading the token. We try to be transparent with the information, and we make sure that insider trading is kept to an absolute minimum. Why does this not happen on the largest cryptocurrency? Now, it's very unlikely that you have inside information, but you can insider trade. And I think this should be really watched out for. And I hope that more and more marketplaces around the world kind of help this, because I think this would really help the entire ecosystem in this. The next thing that has to change is a bit of a perspective on valuations. And it's something that I've had fierce discussions also with my co-founders on. I think the way cryptocurrencies are measured is ridiculous. It just goes onto market cap. But market cap doesn't say much because there's no production, there's no productivity. It doesn't mean just because something has a higher market cap, it's more or it's better than something that has a bit of a lower market cap. It might not have. It reminds me of the time when Yahoo ranked websites simply on how many times a certain word, let's call it the word dog, appeared on a website. So if a website had 100 times the word dog and another website had 500 times the word dog, the website with 500 times the word dog was more valuable than the website with 100 times dog. So if you looked into Yahoo and you typed dog in, the website that came up was 500 times the word dog. Even though that website might have nothing to do with dogs, they just used this to rank with a keyword. And this was the main reason how Yahoo then lost their spot to Google, because Google realized it's not about the quantity. It's about what? It's about quality. So what's the quality behind these coins and how would you measure them? And we've had massive discussions in our company also. We have at the moment 1-2 people in our company who are only working on trying to figure this out. Is the number of transactions the most valuable? Is the transaction volume? How would we know how many nodes are there? Are second layer solutions like Lightning, do they make a coin really, really valuable? Or is there something else? Is it really the trading volume on the exchanges when we know that they all wash trade and they all fake their exchange volume? Is this the key thing? But this is how, at the moment, CoinMarketCap, the largest site, lists those. And I think it's quite distorting. So I'm not bringing this up because I have the perfect solution. I don't, and I think no one has at the moment. But I'm bringing this up because maybe there's someone in the room who does, and who has the right idea, who has the Google idea. I promise you, this is insanely powerful and insanely important. Because as far as I have seen some of our internal research, even though Bitcoin is #1 right now, there can actually be other coins who could be the better investment or who could be more valuable. And I'm not saying which ones right now because I'm not 100% sure if our data is correct. But what I'm saying is it challenges some of the ideas that are brought by just stupidly rank them on market cap. We've spoken a lot about cryptocurrencies. Let's shift to the next application, and that's smart contracts. Now, smart contracts, the largest smart contract platform is Ethereum, and one of its very, very first applications is a betting platform. And basically it allows, that's again, let's talk about the problem it solves. It is a solution, and that solution is it allows you to bet on anything. Great idea, right? Well, not then if suddenly there's bets being done on when people die or when people get killed. This is exactly what happened in this case with Donald Trump, where suddenly people started betting on when he will get killed, if he gets killed. Well, it gets even worse. Suddenly you have sick people lying in a hospital, and suddenly bets are being made on them if they survive another day or another week. Now imagine it this way. Imagine there's a bet being done on you. No one can stop that. Now imagine if suddenly 1,000 people bet on you dying tomorrow, and suddenly there's $1 million being won if you die tomorrow. Brings a new business to Hitman, right? So the thing is this. Just because it sounds good on paper and because it's a nice solution doesn't always mean that it's actually solving a real world problem. And we see this a lot with smart contracts. We see this with so many great ideas. who are out there making an ICO, raising tons of money. And then 3 years later, people start asking, why are you actually here? What's the problem you're actually solving? Because no one really cares about the solution you have. There's actually 20 other ways to solve this problem better. And this is, in my opinion, where there's a big shift needed. We need to ask ourselves, what are you trying to solve? And I'm not saying that this platform is out of place. I'm not saying they shouldn't be here. I'm saying, in my opinion, they need a better offer for what to solve for. This doesn't only apply to them. I think at the moment it probably applies to thousands of projects in the entire crypto ecosystem. One topic, and I've heard this before, is this topic of security token. And I think there needs to be a massive shift. Not only Liechtenstein I think is the front runner, and this quote that was said by the introducer is completely correct. I do believe Liechtenstein at the moment has the potential to be the crypto capital in the world, just on how foresighted they are and how innovative they are. But let me dampen some of your motivation and some of your excitement. I do not think that security tokens are the killer app. I don't think. And I'll tell you why. Let's talk first about security tokens. Security tokens are no innovation. What's the innovation of security token? It has some regulatory innovation, it has some interoperability innovation, but it doesn't have much innovation, if you think about it. What's the innovation? Well, we have shares already, we have REITs already for real estate. Yes, I can tokenize literally anything and whatever, and there might be some innovation there. The question though is, I think, the biggest problem security token will solve is just regulation. It will skip a few steps, and it will make things faster. I don't think in 20 years we'll look back and be like, wow, security tokens were the killer app. And that's at the end what we're looking for, right? The internet times, what was the killer app in the internet times? Well, it depends. I think in the internet times, no one started the internet with Facebook in mind. No one did. No one started with Amazon in mind. No one did. We all started with, okay, let's just send files back and forth. Let's have a library be able to share some information. Let's send an email faster than a letter. That was the initial idea in mind. And I think that's where we are right now. So we are solving these very initial steps. So the big question is going to be, and I think there needs to be some mind shift there. What's going to be the killer app? Honestly, no one knows, because you can't know until you look backwards. But there's a couple of things that you should do, right? And I'm not saying that the next thing is going to be the killer app. I'm just saying it could be a candidate. Paul Graham, founder of Y Combinator in the US, always says, if you want to know what to invest in next, look at two groups of people. Look at children and look at the tech geeks, what both of them are dealing with. Because they are normally at the forefront of all that. And honestly, we could have all made millions of dollars in Bitcoin had we just done that. Because tech geeks were the ones who told me as a patient in 2011 that I should invest in Bitcoin. And it was the children who then very early used these Bitcoin to buy something on the digital world with games and so on. So we should have just listened to them. So what are these tech geeks playing with at this very moment? Well, there's a couple of things. One of these things are these NFTs, non-fungible tokens. And again, I'm not saying they're going to be the killer app on the blockchain. But I'm telling you, if I just think of some of the things that have to happen for this and where I see the world going, I can see some amazing things happen. It was so funny, last year I had a Forbes interview, and the interviewer there asked me, it was in November, and the interviewer asked me, Julian, what do you think was the biggest milestone in 2017? And he had assumed that I would talk about ICOs. ICOs 2017, massive. And I said, you're going to be laughing, but I'm telling you something, CryptoKitties. And he said, you've got to be kidding. CryptoKitties. Anyone who knows what CryptoKitties is? Yeah, who doesn't know? Okay, a couple of you. CryptoKitties are nothing else than these really ugly cats that you can see here in the middle. And these are these little digital cats, and they're completely unique. And you can invest into those CryptoKitties, and you can own one of those kitties. Now, just to kind of explain this a bit, some of these kitties are $100,000 worth, right? So insanely valuable. But they're just the beginning of the digital asset world. Sina, can you play that video, or how does that work? Can you? I want to show you a video and then kind of play a bit with your imagination of what this actually means or what could happen with these non-fungible tokens. I hope we're going to get the video sorted. What you will see on there, and I will, it doesn't have any sound, no worries. You will see the ability or the possibility to make digital things rare, and completely valuable. And that is something that hasn't been possible prior to these non-fungible tokens. Working? Not working? What a pity. Okay, so you are not going to be able to see this, sorry. I'm going to explain it to you. What this video would have shown is virtual or augmented reality objects, like a car, like a helicopter, like anything. And you can have them, and you can place them, you can trade them, you can exchange them. So what you could have is you could own something like a virtual car, and it just sits there. And it sounds like such a stupid idea. But this car is completely unique, and you can prove it's unique. And so suddenly, it's not about there only being 10 Ferraris of a certain kind in the world. No, there's 10 of these virtual things in the world. Now, for many of us, we sit there and we're like, so? Well, but trust me, kids and tech geeks are playing with these things right now. I'm not saying they're going to be right, but I'm just quoting a couple of things, and I'm telling you, if you're an investor, you should look into those things right now. It might be nothing, but I would rather play with these things as an investor than I would play with security tokens per se, unless security tokens are going to be way more exciting, just from a potential standpoint. Because we could see games, skins, and a lot of other things who are going to be using these NFTs, and it can be very, very interesting and attractive. So let's talk about the ninth one. Ninth one is actually connecting these blockchains and actually exchanging trust. That's something that's been missing. How can one blockchain talk to the other one? A lot of companies actually solve this by creating a new token, a new blockchain. We strongly disagree with this. We believe blockchain should integrate natively. And we are working on a system called Comet. We've had a prototype out just prior to summer. We're going to be open sourcing Comet this year, so any kind of person who understands the tech can actually start integrating other blockchains and can start building on top of it. What this is going to allow is for one blockchain to communicate to the other one. And these two blockchains don't have to be part of cryptocurrency. This is going to be open source. You don't have to pay for this. You can just use the underlying infrastructure. You can use the underlying code. This can be public and private blockchains together. No investing into a new token, no need for buying something. No, it's just one value communicating to the other. That's exactly how our internet works. And the last and final one is a major question, and that is, who is responsible? Who do you go to in a system that's decentralized by definition when no one is in charge? There is no customer support to call on Bitcoin and on any other blockchain. And the only answer is very simple. It's you have to go to yourself. And this is difficult every once in a while because we all know stuff goes wrong, and I'm not sure if this video doesn't work either, right? Are we going to make this video work? No. So this video doesn't work either. Great. So we're going to finish with the answer to that. And the answer is, I think the inherent problem of decentralized systems is that they are completely decentralized. But most people don't want to be responsible for everything themselves. They want to have the mix. Just like in a government form, we don't want the dictatorship, we don't want anarchy. We want something in the middle. And that's going to be the trick. Any company, any government, any kind of institution who figures the mix out, I'm telling you, is going to be winning massively. Because they're going to offer enough trust through a blockchain while still keeping enough responsibility. And I think that's going to be the power going forward. So these were these 10 things. My really inspiration for you is get more than just CryptoFit. I always have this hashtag, get CryptoFit. Get more than just CryptoFit. Pick up this book, it's outside. You can just pick one up. It's called Blockchain 2.0, More Than Just Bitcoin. I know many of you have. Read through the applications in there. See the problems they are solving, the problems that still need to be solved, because most of them still need some problems to be solved. And ask yourself if you are someone who might be able to solve the existing challenges. And if you want more, then just check out our website, Next.tech. Thank you so much. If you have any questions, I'll be outside. Thank you.